to really become Web3, you need to have a decentralized, and you need to have a good tokenomics, a good business model, and you need to have NFTs also as.
Welcome to the Early Advantage green studio curtain with some paraphernalia in the background edition. I have been on a kick, as you may know, to unpack Web3. What is it? How can you invest? It's this big hot thing, at least among certain circles. But like, what is it tangibly? This week, I interviewed Vivi Lin, who's a partner at Octopus Network. This is a Web3 company. And what I like about Vivi is she really breaks down Web3 in terms of tangible examples, like what it is versus, let's say, some Dogecoin type of vague, fuzzy thing that is just sort of an ephemeral or maybe an art type of value, right? And not the eye of the beholder, only without something that's pegged to true economics. Because as a dyed-in-the-wool long-term fundamental investor myself, I only want to invest in something that has long-term actual economics. So if you think like that, or if you think almost like that, I think you'll enjoy this interview. And as always, we have Brian Christopher with his trusty Bloomberg screen of the week with some stocks that you may want to take a look at or add to your watch list. Let's get to the show. Should you invest in crypto now, or should you wait? And let me say that differently. I tend to think that people who have money in crypto now, like myself, I have a little bit of Bitcoin, either we're going to be geniuses later on, or we're going to be really stupid, and nothing in the middle. And joining me to help unpack this question, not just the investing question, but really what is crypto, what is Web3? Web3 is this buzzword that is everywhere. And if you've been reading my stuff, you know that I'm on this mission to figure out what it is in the first place, because it's hot, people are investing in it, but like, what is it? Joining me to help unpack this is Vivi Lin. She is a partner at Octopus Network, and she describes herself as a Web3 advocate. So basically the perfect person to have for this interview. Vivi, thank you very much for joining us today.
Hi, James. Thank you for having me.
It is my pleasure, and it's our pleasure to have you. How did you get into crypto? How did you get into Web3?
Oh my God, this is a really good question. Where should I start? It actually dated back in 2011 when I just started off as a young reporter for Reuters Financial TV. And if you remember, Bitcoin at that time went through 100x from $0.3 to $30. And people in the newsroom were talking about it. And I still remember reading this article from Wire magazine titled "The Rise and Fall of Bitcoin." And so that was really the first time I heard about Bitcoin and crypto. And coincidentally, my boyfriend at that time, who is an IT guy, an IT architect, and he asked me whether we should buy some Bitcoin. And he really heard some cool stuff from his friends at the forums. But I didn't understand anything about it. And so I didn't get involved, how much I wished I had. But fast forward to 2017, which is the previous bull market. And I already moved to Silicon Valley and started my own show, Vivi in the Valley, in which I interview a lot of entrepreneurs.
Vivi in the Valley, I like the sound of that. It's a good name.
Yeah, thank you. And so I came across many people in the Bay Area quitting their jobs from Facebook or Google and to start their crypto projects. So that is how I really, pay attention to the space. And after I interviewed some major crypto players, I got an invitation to be the global partner for one of the biggest Chinese crypto media, which is equivalent to CoinDesk for China, to help them with their coverage and to bring their brand global. So that is how I went down the rabbit hole ever since. So fast forward to today, I have been through the bull and bear markets, and now I've been working with crypto startups as partner, like you mentioned, like such as for Octopus Network, and also advisor and investor. And so the more I understand the space, the more faith I have about Web3 and crypto.
That's a bold statement. And it's not, crypto has been a wild ride. It's been a big roller coaster. And it's from starting in 2011, it seems like you've basically been on that entire roller coaster. And that's certainly impressive. And you've probably made a lot more money than I have in crypto.
Oh my God, I have so many bloody stories. Maybe we save it for some next time. Yeah.
These stories always make good media. So hopefully there is a next time. Crypto has made people billionaires. It's also made people broke. It's been billed as this technologically safe thing, as an uncorrelated asset, but then on the other hand, it often behaves like a meme stock. crypto has crashed so far this year. It's up a little bit lately, actually, but would you say the crash has wiped out? Let me back up. I think a lot of people, they know it's been volatile. They know everything I've been saying. You know, it's been great. It's been bad. It's been all things to all people in some ways. But did that crash wipe out the dumb money, as people would call it, the people who were just buying because other people were buying? And is it just the smart money left, or do you think there's more pain to happen?
Yeah, I mean, that's a good question. The market sell-off, I mean, you need to have a strong heart being in crypto, right? So the ups and downs is like 10 times or like many times more than the traditional stock market. But yeah, if you look at the on-chain data, and I think that's the beauty of blockchain, because a lot of data are transparent. So we can see that many smart money continue to enter the space. Now, like just recently, BlackRock, for example, recently partnered with Coinbase to make it easier for institutional investors to manage and trade Bitcoin. And also another hedge fund, Brevan Howard, also announced their $1 billion crypto fund. So, and also a lot of VCs that I know, that I've been talking to are really taking a long-term view on crypto. So they're really going beyond the market cycles. So so I'm pretty confident that institutional adoption will pick up, but obviously the individual investors, the retails, they would follow. But given the market condition, you know, like we are really very deep in the bear market right now, and we are probably entering a recession. So this is really not a good environment, even for crypto and for the whole stock market, for financial market, right? But I think if we take a longer view, once the institutional adoption pick up, and it will also attract more retail investors into the space. So I think if we have a longer term view, that once the market condition improves, I think we'll see much more retail investors coming back.
Yeah, if you look at what people like Sam Bankman-Fried are saying, he thinks crypto could go up 10x with institutional adoption. It would seem, and we're recording this, by the way, not long after the Ethereum merge, and without getting too technical, that's something that reduces energy by 99.95%. Previously, Bitcoin mining uses, as if it were a country, it would be the 34th largest country in terms of electricity usage. So that's huge. And Ethereum's moving to what's called a proof of stake protocol, reduces the energy usage, and B, it also because instead of validating transactions with computer work, people are validating them by just putting money into Ethereum. And presumably that gives like a bond-like yield, which is something that institutions might like. So A, they'll like, from an ESG perspective, it's more green. B, they'll like that they can get, 4% or 5%, whatever the number is, yield. In terms of the yield is in more Ethereum, it's not a cash yield, but those are two attractive things. It seems like, though, that's maybe 15 or 20% of what institutions need to really get on board. And the remaining 80% would be clearer regulations, because in general, across the world, crypto regulations are still very new. Would you agree with that, first of all? And second, if you do agree, what kind of time frame might we be looking at?
You mean for the institutional adoption to happen?
Yeah,
I think
you're something like a 5-year thing, a 2-year thing. Go ahead.
It's hard to say. It's hard to predict. The thing is, crypto is developing very fast, and I totally agree with you. Regulation is a big part of it. And if you look at all the moves, like SECs, actually, US is embracing. If you take the global view, right, like US is embracing regulations, and a lot of crypto funds like Coinbase, and the big ones based in the US, and they also expressed, even Binance also, they have always been saying that they're happy to collaborate with governments and to go with the compliance. So I think that is like really a big area that everyone is looking at, because it matters, even though crypto, a big part of crypto is about decentralization, but people are not completely decentralized. If you look at the war between Russia and Ukraine and how the impact on the crypto space.
We're nowhere near decentralized. Absolutely right. Yeah.
Yeah. But I mean, this is an idea, right? So it's a good idea to have the idealization to go towards the direction of decentralization. But while we still live in this realistic world, so I think how to coexist with the authorities, with governments, with regulations is definitely one of the big topics that the crypto space needs to tackle. And so that's why you see these big players, they are hiring former SEC or the regulators to come and work with them as advisors, because they're really looking for some middle ground there and to see how to make it work. And I think it's a very smart move for the US to embrace, and also to embrace the crypto, to make sure that really Web3, the innovation and everything could still happen. US still take the upper hand in the space. So it's really hard to predict, but I think the trend is happening. We're seeing, like we talk about, right? Smart money from Wall Street and the brightest minds from Silicon Valley and the VCs, they're all pulling their money in, even though the proportion is still very small. But I mean, the potential is there. And if you look at the international institutions, and there's a statistic that I think, well, I don't have the exact statistics right now. I could double check, but the thing is, you need to look where the direction is going, right? So you can't just look at right now, because we're still at a very early stage. So if each listed companies like for example, Tesla announced that they were holding Bitcoin last year, and then it had a big boost on the prices and everything, right? So at that time there was a discussion if even 5% or 1 or 2%, each listed company can just allocate some of their fund to crypto, it will be a big boost on the market cap already. So I think the trend is happening, and exactly like you said, after the merger, and if when Ethereum becomes greener and everything, and that just gave people more motivation to enter the space.
So from stepping back perspective, the institutional adoption, whether it's investors or corporate treasuries like Tesla did, and then they backed away from that, but they did do it for a while. That seems like a really positive catalyst. Then on the other side, though, we have something that I like to talk about a lot, and my listeners are probably sick of me saying this, but in the US, I think we've had something like 2,000 car companies come and go. In the 1930s, I think we had more than 200 at the same time. So in other words, whenever you have in the 1990s, we had hundreds or maybe 1,000 or more e-commerce platforms. And now we have like 4 car companies. Now we have Amazon and eBay. There's this a flush of new companies whenever there's a new industry, and then there's a massive consolidation to just a few winners. I heard that there are more than 17,000 coins right now. I'm going to guess that you would agree that number is going to come way down. Do you have any rough idea what it will come down to, number one? And second, for people investing in crypto, is literally everything a coin? Is that the channel, or a coin or a fund that holds coins? That's the main way to do it, is my second question.
Yeah, so that's a very interesting question. So let's put it into perspective. If we compare it to the stock market, for example, there are roughly 35,000 companies listed on the largest stock exchanges worldwide, and the total market cap is around 100 trillion. So if we look at the crypto market in comparison, the market cap is around 1 trillion. So only 1% of the stock market. So you can see how small and how early it is right now, right? So I think we need to understand that, whether we need these coins, that's the question, the numbers. So numbers actually don't matter, because in essence, it's a question about the real use cases and applications, right? What is behind the coins is actually what is behind one share, right? It's one company. So whether the company has value or not, so we need to focus on whether those coins, the startups, really have values. So it's about whether the product is good enough, whether people are using it, and whether it's creating real values. So if a coin is listed only for the sake of trading, it's definitely pure speculation. You issue coins, you trade them, but there's nothing underneath, and that obviously is just a numbers game. And it has really, we don't need them. But if a coin represents a real application and it has like its royal users and everything, and the token is functional, so the more the merrier. So we can imagine, more if more values underneath those companies, and it's a good thing for the space. So this is your first question, and the second, what is the second question again?
Oh, just is the only way to invest in crypto is that they're all or in Web3? I mean, this is all into a coin, right? Everything in some way is a coin, right?
Okay, yeah. So how can basically individual investors invest in crypto projects, right? Whether it has to be a coin or what else. And obviously, the most direct way is through buying the token, the coin, through the secondary market, right? So you can buy it in centralized exchanges like Coinbase, Binance, or decentralized ones, and it's even more trickier, like Uniswap and all these different swaps and the decentralized ones. But I think that is why this is also one of the big agenda that crypto people are pushing through the ETF, right? So the Bitcoin ETF and everything. So if that is approved, that would have also help with mass adoption. So it goes together with the adoption of institutional investors, and also goes together with the regulation. So I think it's working in progress. But I think some, like for example, Goldman Sachs and like I mentioned, BlackRock and all these hedge funds, and they're still working with crypto exchanges to come up with products that allow more people to buy, and in a way that is regulated and safer for so that the is more protective than you just go to all this wild west of the crypto space. I mean, for newcomers. And so I think there's a lot of activities going on, a lot of movements happening. So I think we are heading towards that direction. But I'm not sure how long, because it's really hard to predict. Could be super fast because the space is moving so fast. Who would imagine Bitcoin prices, if you look at last year compared, now we're in a kind of a bearish market, but last year when everything's so crazy and a lot of things happened just faster than anyone could have imagined.
I certainly agree with that. You said something earlier that I really liked. In the stock market, I often say that in the long run, stocks, it's almost impossible for a stock to trade too far away from the fundamental value that it adds to society. I mean, sometimes there are meme stocks, things get hot or things get overly cold, but if in the long run, a company is adding actual value to the world, its price is going to go up. And it sounds like you're saying the same thing about crypto in Web3, I guess, by extension. What do you think in the next, I mean, there have been periods, certainly in crypto's existence, where it has destroyed more value than it has added, and probably added more value than it destroyed. It's been up and down. Let's just say over the next 10 years, and I'm guessing I know the answer to this already, but I want to hear you say it anyway. Do you think that crypto will, in terms of contribution to society, relative to the actual investment money coming in, do you think it will add more value than it destroys? Will it keep its promises, in other words? That's my question.
Sure.
Will it keep its promises?
Yeah. I definitely, you know my answer, obviously, since I'm a Web3 advocate, and the answer is definitely yes. So if you look at the space, we need to take also like put things into perspective. If we look at, if we travel back, right? So we look at the space 5 years ago, the market cap was just around $150 billion. And now even after the market crash, it's 1 trillion, right? So last year, it's over 1 trillion. And last year it touched upon 3 trillion. So you can see how much value or market cap like it created. So like I said, a lot of activities are happening. People, if you need to follow the money, right? So the same way we see Wall Street pulling money in, we see Silicon Valley like X16Z and a lot of those top VCs in Web2. They're also in Web3, like also like ARK Kathy Wood and all this really kind of people in the front line, and they are very bullish in crypto, and talents are going into the Web3 space as well. So I think definitely it will continue to create value, because like you said, right? So underneath is all about how we can create the value, the real applications, and the pioneers have to be there. So if the smartest people in the world are investing in the space, are working, are building in this space, definitely more values are going to be created. And we are already seeing the good signs. And obviously, we're still at a very early stage. So I think we just need to continue to bet on infrastructure, need to be in place. Like the same with the internet, Web2 era, right? So like we don't, as normal consumers, we don't need to know how those infrastructure works, but a lot of people are building it, and so we benefit from it. The same way with Web3, and so more applications emerging on top of that, and I think combining this all together, I think in 10 years there will be explosive growth in the space, probably in even like 2 or 3 years or 5 years time. And this definitely a work in progress, and we are already in this very exciting transition.
You're making me want to invest more. Mentioning Web3, so Web 1.0, just for new people, that's basically just reading stuff on the web, the basic internet. Web 2.0 supposedly is kind of like the social media web dominated by Facebook, Twitter, Instagram, these big platform companies. Web 3. And there's a separate term, Web 3.0, which some people think is a different thing, which I won't even get into. But Web 3 has been criticized because there are many different definitions floating around. And at least there are some bad actors, or maybe not bad actors, just confused actors hoping to benefit from the hype of whatever the Web 3 is going to be. I'd like to hear you explain it. What is Web 3 in a nutshell?
Yeah, I think you explained it very well about Web 1, read, Web 2, read and write, interact, and then Web 3. On top of all that, it adds the ownership, the layer of ownership, right? So in Web 2, we don't own our data. Data is the new gold, and the data is owned by the big companies. But in Web 3, because of the nature of blockchain technology and the nature of decentralization and NFTs, and all of this are making digital products, digital stuff, the property rights possible for individuals. So we owned our own data, and I think that makes the fundamental difference. So a lot of new business models could emerge from that, because the fact that we own our digital data, and then giving the rights back to real users. So for example, as a creator, now you truly owned your own product. But obviously, there's a lot of things needs to be done, like infrastructure need to be in place because of the storage, and the whole business model still need to be tested. But that's the direction. And I think if you couple, so in short, Web3 is about ownership, and if you couple that with decentralization, NFTs, tokenomics, and you basically are seeing a new paradigm shift.
Is Web3 by definition also involving a blockchain, or they're separate?
Yes, it involves blockchain. So it's blockchain technology, but it's not only that, because blockchain technology is just a technology, right? So like the government can use it. We can talk about that later. I mean, like the Web2 companies can use that as well. It doesn't have to be centralized or decentralized. It's just like kind of an accounting. Basically, it's a tool. But to really become Web3, you need to have a decentralized, and you need to have a good tokenomics, a good business model, and you need to have NFTs also as a tool to make things like more decentralized, more secure, more scalable.
I think you partly answered my next question, but I'd like to hear a little bit more. If I gave you two buckets and said, just conceptually, maybe without naming names, you could name names if you want to, but you got Web3 companies out there in the world. What kind of companies would you put into the loser bucket? And what kind of companies would you put into the winner bucket? And obviously, Octopus Network, because it has you and you seem to know what you're doing, I'm guessing you're going to say that's going to be a winner. I'd like to know why you think your company in particular is going to prosper. But
Yeah,
before that,
so
maybe broad categories like who's going to win, who's going to lose.
yeah, so I think it's interesting. I know that we talk about, like, I cover the financial markets in, like the traditional financial markets for Reuters for many years. And I know that we need to have this analogy of winners and losers. But I think personally, I don't see it as a zero-sum game. It doesn't mean that Web2 or Web3s are necessarily kind of enemies and the two camps, something like that. It's not a situation of having one or another, black or white. And I really think that we'll see the transition of Web2 and Web3 gonna coexist for a long time. So that said, there's a lot of opportunities and room to bridge the two gap. So back to the winners and losers analogy. So those who could make the best of the situation, for example, like you said, like the infrastructure, like Octopus Network that I'm working for, which is a Web3 infrastructure. So it empowers applications, projects with real use cases. So we build a blockchain for each application. So we call it app chain. I don't want to get into too technical about it, but the idea is we empower real applications to create real values. So I think companies like this will gonna survive because infrastructure needs to be in place for everything, right? So I think, and then also companies that, also Web2 companies that could embrace Web3 and make a shift in their technologies or strategies, and they could stay as winners as well. We are seeing a lot of them already. For example, like gaming, some gaming studios, they already either allocate a separate fund to invest in Web3 projects so that they could disrupt themselves, so that they won't be left behind, or some other branding companies or some big, even retail companies, they're really using NFTs, for example, either as a marketing hype or whatsoever. Like, as long as you embrace the technology to show your audience, to show your users, you are following the trend. And I think those were gonna be winners as well. And also Web3 companies that could disrupt Web2 in many ways, like gaming, for example. We're already seeing the new business model, like play to earn. This is GameFi 1.0 and play and earn GameFi 2.0. And a lot of companies, they could leverage or learn from Web2, for example, in the user experience and in the business, like in a lot of ways. And you could learn from the Web2 and tap into the Web2 kind of consumer base, and those companies are going to be winners as well. I mean, losers obviously are going to be those who fail to adapt to the trend. And like Charles Darwin's famous quote, right? It's not the most intellectual, not the strongest that survives. It's the one that's able to adapt to the changes. Right. So I think, to sum up, I think the winners will be those being in Web2 or Web3 that could be flexible enough to adapt to the new changes.
Got it. So it's really not super complicated in the sense that obviously companies that don't adapt or that don't execute well, or companies that are fraudulent, they won't do well. But that's true anywhere. That's true in any business setting. So it's not really different.
Human nature. It's really human nature. If you look at crypto, it's the same. It's the same way with stock markets, just because it's like faster, maybe with newer technology and with less regulation. But it's human nature, right?
And when you mentioned like real projects, just to make a little more clear, like you mentioned gaming, I know, for example, some NFTs are being sold by musicians or music groups, that you get a concert ticket, but then you might get like a smart contract that gives you some backstage party access, things like that. That's kind of what you mean, are things that have an economic like substance even before we talk about Web3. but then you can bring Web3 into the picture and make that thing get done more easily or more efficiently or more securely, something like that. Is that roughly correct?
Yeah, I think that's pretty correct. In a way that you need
Pretty
to
correct.
have,
That's pretty correct.
yeah, I mean, like you need to have the real use cases and real users, and then those stuff. But obviously, there's some fundamental change, and we are still at this early stage, for example. And if you continue to ask a lot of questions, and sometimes we don't have all the answers yet, but I mean, we are working towards that direction, right? So, like for example, like NFT, you can. The idea is you own that digital. You have digital right for that product forever, right? Because you have the provenance. You can prove the provenance. Otherwise, all the digital copies are the same, and you're supposed to just own it forever, no matter what platforms. And it's not like, okay, I have this stuff built in by Thomason or by Facebook, and if Facebook changed the rule, I don't own it anymore. Or
Yeah.
if they change the server, things would change. So that means you can have it forever. So I think that makes a lot of a huge difference. And then you can also prove that you can also write all the rules into the smart contract. So like the royalties, for example, if you're a creator, if I get 20% whenever someone buys some stuff, because it's on chain, like it's going to be executed automatically no matter what. But I don't want to get into all this technical details. For example, if they ask, oh, okay, so where do you store this the data on which chain and everything? So that is a whole bunch of people sector working on that, file storage and security. But I mean, things are happening. People are working towards that direction.
Yeah, and that obviously has huge benefits. It does have some problems too. I mean, there are certain benefits to centralization there, and we're seeing some of those. Hopefully, they're just growing pains as the industry moves towards a better progress. Speaking of that, let me cut back to a fundamental question. The Central Bank of India, the Central Bank of Finland, think that that I wanted to say private, but I think the better word is decentralized cryptocurrencies like Bitcoin, like Ethereum, like all these other ones. They think they're going to die because central bank digital currencies are going to replace them. Obviously, China has been probably at the forefront of this, being very aggressive with the digital yuan. US and many other countries are not there yet. Are those central bank? I'm guessing you're going to think those central bankers are not correct, that they're worried too much. But what kind? Maybe I'm wrong. What kind of a risk do central bank digital currencies play to these independent cryptocurrencies?
Okay, so first of all, I would like to kind of clarify some of the concepts there, like CBDCs and all these digital currencies that build on. Actually, they are private blockchain because they're not public. They're centralized. So all this money that issued by central banks, they are no different than fiat. So they are still fiat because they're issued by the central government. They're controlled by the central government, right? So I think we're talking about two different things. And even the stable coin, or stable coins are cryptocurrencies, but CBDCs are not stable coined. And for example, stable coin like Tether, for example, they are backed, some like Tether, USDT, for example, they are backed by dollar reserves, and they are pegged to dollar 1-to-1, but they are not the same as CBDCs. So I think we're just talking about two very different things there. But whether CBDCs or China's digital yuan would have an impact or killed Bitcoin or cryptocurrencies, I don't think so, because they're very different use cases. And I think you can think about digital CBDCs as another digital money issue, another form of fiat. So people who use them and people who use cryptos or like invest in cryptos are completely very different usage and groups.
That's a great point.
So I think they would coexist. I don't think that one would kill another. But obviously, there will be some kind of synergy. Like I said, like for example, like stablecoin, they are backed by some, for example, like choose dollar, right? Backed by dollar reserves, and then they are pegged to dollar. So I think it's still a kind of reflection of how the traditional financial world works. And it's all about, I think one thing interesting about crypto is, I think it also goes back to money, right? If you think, what is money? Why this piece of paper, we think that it has value? It's all about consensus. But it takes a lot of things. It's a big topic. Why do we have the consensus on this, not that, right? Why do we agree that we want to peg the value on dollar, not other currencies, right? So this is because you obviously you have the economic power, you have the military, you have everything. But if you don't have that, if it's decentralized, and you need to also, we are still humans, right? So like it's a very interesting topic. But I mean, back to the point, I think that cryptocurrencies and stable coins, including stable coins and CBDCs, we're going to coexist.
That's a great answer. I didn't think about it that way until you explained it, that CBDCs, they do share some of the technological benefits of cryptocurrencies, but they're still controlled by central banks. And a large part of the reason people use cryptocurrencies is to use a currency that is not controlled by a central bank. So they can never replicate each other perfectly or replace each other.
Yeah.
It's a different substance. Just quickly, two more questions.
And let me also give you an example. For example, like central bank, like fiat or CBDCs, if they want to continue to print money, they can do that, right? So because it's controlled by the government. But if you have a cryptocurrency like Bitcoin or any other cryptocurrencies, a lot of the rules are written in smart contracts that cannot be reversed. Like if say the numbers, if we just have a cap and that's it. And if we're saying like this is the use case for those currencies and that's it, you can't just like revoke that decision. So also it gives people confidence, and when, for example, when inflation goes really high, when some fiat are depreciating, and that is why a lot of money would go into safe cryptos, like trusted cryptos, like Bitcoins, and because people think that it has the storage of value like gold.
Yeah, exactly. And obviously central banks, people trust them too. So fiat sometimes is safer also, but we'll see in the future, maybe it'll trend the other way. Two quick questions. You may not have an opinion, but Bitcoin versus Ethereum in 5 years, do you have a winner?
I also think that, except for some maximalists that might argue about which crypto would win, Bitcoin and Ethereum obviously are two biggest cryptocurrencies, right? So I think for me they are not like competitors, and because they serve very different purposes. And Bitcoin is like I said, digital gold. So think of it as a storage of value. You wouldn't use it for trading. You wouldn't use it for day-to-day usage, buy a coffee or anything, but probably you put your money in it thinking that it would appreciate in time, and very safe, right? So, and then, but Ethereum, especially after the merger, I think it would have much more use cases. It's like the hub for crypto applications, right? It has altogether like $60 billion market cap of crypto exchanges, lending companies, NFT marketplaces, and all the other applications. But not only Ethereum, there are a lot of other layer ones protocols out there doing something similar as well. So now I think it's going to be more scalable. More people would trade, but it won't change I think it won't change the status of Bitcoin. Bitcoin is still like gold, and Ethereum and all the other layer ones. If you believe in multi-chain ecosystem, which I do, I think they would gonna thrive and bloom with more applications. So I don't think there will be a winner loser. I don't think it's a winner loser kind of scenario, but rather like they work very well together. If you look at the correlation, if Bitcoin prices drop, Ethereum would drop too. It's very rare that one is up, one is down. So they really go hand in hand, and I think the trend will continue this way.
Last question. If someone is watching this and is interested in learning more about either Web3 or cryptocurrency in general, where would you direct them? How should they begin their study?
Wow. Okay. So it's not a financial advice or anything, right? So this is really just for for sharing some of the kind of experience and expertise and all that. I really think that we need to have an open mind in crypto and Web3 because something really new. And I really like the name of your show, Early Advantage, right? So anyone who's early enough to be in the space will have the early advantage. So that requires us to have an open mind and to learn new things and to read, to embrace the new things and don't let our past kind of bias get in the way. So that said, because it's a wild west out there, so we really need to be cautious. And there's definitely a lot of scams and hype. So we need to go beyond the hype and fear and all that. So it's like greed and fear, right? So how do we do that? We really just need to follow the trend and watch shows like your show and follow what the experts in the areas are doing. And if you are really into investing, if you don't have the savvy kind of information or tools like the quants or hedge funds and just don't do something crazy like don't hedge, but just focus on the big fundamentals and really see what are the values those coins or projects are creating. So I think, for example, Ethereum, Bitcoin, and the layer ones, they're really already showing great tractions, building really good applications, and people are going to the space and creating a lot of value, like gaming as well. Like a lot of people are, especially globally, if you see Southeast Asia and a lot of those places are, you see explosive numbers of people playing those games and creating values. So I think it's just really about seeing the fundamentals, but be cautious.
Step by step, learning one step at a time. Always good advice for crypto, for anything else in investing, for that matter. Vivi Lin, partner at Octopus Network, thank you very much for joining us. And thanks to you guys for watching at home.
Thank you, James. Thank you, everyone.
Hi there, I'm Brian Christopher. I'm the editor of Follow the Money at South Bank Research. And in these videos, we take a theme and we run with it. We can get the themes from any number of sources. Today we're going to let some pictures guide us. These pictures show that sometimes you want to follow stocks that are doing certain things, and they don't always have to be rising in price. It's tough to buy low when something's expensive. CF Industries, ticker CF in the US, makes fertilizer. But the reason I'm highlighting this stock is because from the end of 2011 to the third quarter of 2015, CF bought back more than 35% of its shares. The yellow line in this chart is shares outstanding. You can see the big decrease in share count while CF's free cash flow yield in pink was high. Free cash flow yield equals a company's free cash flow, which is cash from operations minus capital expenditures, divided by its market cap. The higher it is, the better. Companies that can retain a lot of cash after sales have financial flexibility. They can use those funds to pay dividends, pay down debt, and buy back shares. The huge decrease in CF's share count about a decade ago set the stage for shares to rise. I know because I recommended shares to my subscribers at the time. CF's cash balance has been rising. It increased its dividend payout by 33% in April, and its debt is falling. And you already saw its share count. Shares bottomed with COVID, and today you can see free cash flow is up again. The war in Ukraine has pushed fertilizer prices higher. CF has continued to buy back shares when cash is strong. Another example with a picture that fits our thesis is Apple, ticker AAPL in the States. Apple has been even more consistent than CF, mainly because it's a tech company with sought-after products. Apple began buying back shares aggressively at the end of 2012. Since then, it has cut its share count from 26 billion to just more than 16 billion. It's a $2.4 trillion company, and when you spread that value over 39% less shares, you can see how the per share value rises. The other thing that happens when a company buys back shares is it can spend less on dividends. Follow me here. In its fiscal year ended September 2013, Apple paid out $10.5 billion in dividends. In the year ended September 2021, that number was $14.4 billion. Its total dividend payments rose about 37%. But Apple's dividend is about 2.5 times greater per share than it was at the start of the period. This can happen, meaning Apple can pay more per share because its share count is down. To some extent, what I'm about to tell you is obvious, but it's critical. If a company uses its excess cash flow to buy back shares at prices that are less than its future price, things will work out well for them. That's what Apple did. Remember, it began buying back shares at the end of 2012. As an investor, it's your job to assess how good of a deal a buyback is. Companies that buy back shares just for the purpose of doing it may not create value. You have to buy low to make share repurchases beneficial to shareholders. Now let's consider a couple potential examples. Third Point Investors Limited, ticker TPOU in London, is a closed-end investment company run by hedge fund manager Dan Loeb. Loeb is well known in the investment space, and London's LCH Investments just named him to their list of the world's greatest money managers for the first time. The rankings calculate how much investors earn from their funds during the prior year and since the fund opened. Per LCH, Loeb's fund has made nearly $19 billion for its owners since it launched in 1995. In spite of that success, though, Third Point Investors trades at a more than 15% discount to its net asset value. As you can see, it's common for Third Point to trade at a discount. This discount is reflected by the red shading in this chart. Its current discount is a bit greater than its 10-year average, meaning shares are cheaper than average. But in a market like this, buying things that are on sale is a good idea. Investors don't want to overspend. Value becomes sexy again when the market is expensive. As you can see here, Loeb agrees with that logic, and he sees value in his own shares. He's been buying back a lot of them over the years. This hasn't been the perfect trade. Third Point Investors is down this year, but it has outperformed the MSCI World Index over the past decade. And as we've seen in our other examples, sometimes buying back shares is a precursor to upside. Every time Loeb buys back shares at a discount to their true value, it increases net asset value. It's like buying back a pound for 85 pence. Literally. Another idea for you is Seoul-based Magnachip Semiconductor. That's ticker MX in the States. Its market cap is down of late, as you can see in the gray line on this chart. But I believe that's okay. The main reason for it is because a Chinese private equity firm failed to receive approval to acquire Magnachip. Shares are down since that happened last December. There's interest from other parties, though, including Bain Capital and Korea's LX Group, but terms haven't been finalized. This M&A concept alone is intriguing. Plus, as you can see, the yellow share count line is down, and Magnachip just increased its buyback program. It bought back $37.5 million under the current program and has authorized another $50 million of repurchases on top of that. Free cash flow yield has been strong as well. This name is worth keeping your eye on. As always, we have to consider the risks to these trades. Creating a wish list is just that. It's a list, a place to start. And this is a tough market. Central banks remain focused on raising rates to fight inflation. That provides a headwind to many stocks. But if you can find companies that are generating cash and using it wisely, you can still win. That's the importance of continuing to own some stocks. Stocks like CF and Apple generated solid per share value by buying their own shares when they were down in price. For our perspective ideas, Third Point Investors, TPOU in London, is on sale. It trades for less than the value of its holdings. Back in 2014 and 2015, there was no or only a small discount for this name. And Magnachip may literally be for sale. And even if they don't sell, management sees value there and is buying back shares. It's taking advantage of this market to generate per share value like our other examples. To be clear though, you have to be careful out there. Sometimes it can take a while for the value to manifest itself in the form of a rising share price. But patience is a virtue, especially in this market. Thank you.